Hi, I'm Kalila Reynolds, and welcome to Taking Stock, filmed right here on location at Icreate Studios on Hope Road. We're bringing you all the latest business news and telling you how it will affect you and your money. Come on, let's get this money. First up, two-year-old creative training company Icreate has had a bit of a rough start, reporting more than $12 million in losses in their latest financials. How do they plan to turn it around? We'll hear more from founder, president, and CEO Tyrone Wilson. And later, the analysts weigh in on the latest stock market developments. We zoom in on the real estate industry. Pulse, Kingston Properties, Stanley Motta, and others. How are they performing? What are the opportunities and threats in the industry? But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart. Proven Wealth is giving NCB Cap a run for their money with the launch of its own digital IPO platform called IPO Pro. It's completely paperless and allows anyone with a Jamaica Central Securities Depository JCSD number to participate in IPOs from anywhere in the world. Features include smart immediate e-signature, adding of joint applicants, and uploading documents for submission. Learn more on this week's episode of Money Mondays JA. And speaking of Proven Investments has announced plans to launch an additional public offer APO next month. In a statement, the company says it's raising funds to ensure it has enough to support opportunities arising in the short to medium term. They're hoping to get all regulatory approvals in order to facilitate the opening of the APO to the public in February. A full prospectus and details of the offer will also be released once approval is given. KLE Group has acquired full ownership of all the Usain Bolt Tracks and Records UBT&R franchises across Jamaica. The most recent acquisition is the Montego Bay franchise, which was owned by prominent hotelier and businessman Christopher Issa. Since KLE opened the first UBT&R restaurant at Marketplace in Kingston in 2011, the franchise has expanded to Ocho Rios, Montego Bay, and London. By acquiring full ownership of all its local franchises, KLE says it can leverage this control to expand and develop their brand overall. President of the Jamaica Employers Federation, JEF, David Wan, says an increase in the minimum wage may be coming soon. Mr. Wan is also a member of the Minimum Wage Commission representing the private sector. He told Nationwide Radio last week that an announcement could come within the next 2 months. Meanwhile, Finance Minister Dr. Nigel Clark says minimum wage adjustments are usually made every 2 years. The Finance Minister says the Commission is now going through the information that's been collected. CNBC is reporting that global financial markets are shrugging off tensions between the U.S. and Iran as they're not expected to escalate into a larger military conflict or seriously impact the global economy. U.S. stocks were sharply higher last week, and oil prices plunged. Stocks moved even higher on Wednesday after President Donald Trump diffused some of the concerns by saying Iran appears to be standing down and that he doesn't want to have to use military force. On January 3, President Trump ordered the killing of Iranian Commander Qasem Soleimani, which has left tensions high in the Middle East and U.S. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. Taking Stock is filmed on location at Icreate Studio on Hope Road.
There's a surplus of unfilled jobs in the creative industry. Kickstart a creative career with Icreate Institute.
Now I'm at Icreate. I just love it.
I saw where I was learning things that I could utilize in my present job.
And I have all the skills to do every basic animation thing now.
Jumpstart a creative career with Icreate Institute at UCC. Visit icreateedu.com.
This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy. Welcome back to Taking Stock. As you know, we record here at Icreate Studios on Hope Road. Icreate is a company that listed on the junior market of the Jamaica Stock Exchange a little less than a year ago, February of 2019. Since then, the stock has performed less than stellar. It's been disappointing for shareholders, and the company is in the red. So we have the man with the vision. He thinks he can take it places. Tyrone Wilson, President and CEO of Icreate. Hi, Tyrone.
Hey, what an intro.
People giving you flack, though.
Me?
Yeah.
I don't know. That's what you're saying?
That's news to you?
Pretty much.
Well, but you know where the share price is and where it was in December. You started at $1.01, the IPO price. In December, it came down to 55 cents.
Yeah.
So people were not too pleased about that, and that was on the heels of your report for your 9 months.
Right.
Your 9 months report. It's now rebounded somewhat to 70-something cents.
Mm-hmm.
Tell us what happened. What's going on?
I think we clearly outlined our vision for the company in our prospectus when we listed on February 25th. You know, Icreate is a startup. I think a lot of people are accustomed to the more mature and established businesses. So obviously as a startup, you know, there are certain phases that you will have to go through before you can realize, you know, real sustainable profitability. And Icreate is pretty much doing just that. You know, when we listed on February 25th, shortly after we released our Q1 financials, which would have shown an Icreate that was pre-IPO size, you know, pretty small. And then, you know, we released our Q2 financials, which showed a significant jump in revenues, I believe, from 8.8 million to about 13, thereabout. You know, what that is showing is that the top line is moving, you know, in double digits in terms of revenue growth. At the time when we did that, Montego Bay, which is our new location in Q2, was just 2% of revenues. So Q2 would have shown an even big loss, of course, because, you know, the IPO expenses associated with listing and so forth would have, you know, a portion of that would have impacted our bottom line. And then Q3 now, when you look on Q3, that's when you start to say, okay, all right, that's the real first quarter since Icreate has built out 85% in terms of the plans, which showed, I think, a 69% increase in revenues when compared to the corresponding period in 2018. And Q-on-Q, quarter by quarter, I think a 25% increase. But most importantly, the loss reducing by about 60% from 7.2 in Q2 to about 3.4 in Q3, right? So all the indicators as it surrounds Icreate right now is that we're growing. We're growing at double digits, but obviously we're a startup, and the first thing that's going to impact a startup is your cost. And then now what you need to show as a business is there a demand for your product and services, and I think that is, you know, that is clear in our quarter by quarter results.
Well, tell me about your enrollment numbers.
I mean, obviously we can only speak about up to Q3, which is what we've released. But Montego Bay, as I mentioned, when we did that in Q2, it was about 2% of revenues, and that jumped to about 20%. I think, to be exact, around 18% of total revenues in Q3, which shows now that Montego Bay, of course, is, you know, beginning to show promise based on what we expect, what we feel on the ground, what we understand, and the kind of need across Jamaica for an organization like Icreate that can help to build our, you know, creative economy. In Kingston, it's the same. These numbers have been jumping. When you look on Q1, you know, our core creative courses, in Q2 was about 90 students. And this is the creative certificate courses, and then that number jumped to 138 in Q3. So you find that, you know, as we continue to go out there and market and so forth, and more people are aware of us and our profile, the numbers are growing again at double digit.
In the prospectus, you spoke to expanding to Portmore, and there's also, I don't know what your presence is like in Miami, but I saw that mentioned there as well. What's up with those two locations?
So we have several strategic initiatives that will aid our growth across different markets. One of our biggest is with Digicel's Trend Media, right? And that will enable Icreate through our digital marketing courses. I think we announced that sometime last year, to reach the entire Caribbean. So Trend, I think, is in about 23 markets across the Caribbean, and we started in Trinidad. So we rolled out in Trinidad with Trend Media, and we're looking at some more markets and so forth. That is going to, you know, be...
so those are online courses, right?
There's going to be a combination in Trinidad. It's in person. Icreate.
So you have staff in Trinidad, essentially.
So with the partnership, we leverage Trend Media's infrastructure in Trinidad. So they have an entire team of digital marketing and media experts, salespeople, operations, and we're working closely with them. You know, myself and the general manager, Carl, was there in September, and, you know, it's just amazing the kind of interest we're getting in Trinidad. And, you know, we have other partnerships. You know, one major one is with the Community Colleges Council of Jamaica, which pretty much manages the entire community college network, in excess of 20,000 students per year. And we've signed a partnership with them to roll out our digital marketing courses across community colleges. So when you see Portmore and St. Anne, Monique, Brownstown Community College, all of those are what we're doing in terms of building out. So the type of demand is there, just how we collaborate and partner. And these are the things that, you know, we encourage our stakeholders to pay close attention to. You know, the key initiatives that are necessary to not just grow revenue, but ensure the business is profitable and, you know, have sustainable revenues each period.
But from what I recall reading, and you can correct me if I'm wrong, you had intended to roll out a full physical location in Portmore in 2019.
Yeah, so, well, not in 2019.
No?
Portmore is a location we're looking at. And I mean, for various reasons, the population density over there and so forth. You know, just I used to live in Portmore to understand the market there. So that's one market that we're looking at. I mean, obviously, when the time is here, we'll speak more about that. But we have an interest in Portmore, but it wasn't for 2019.
Okay. When are you targeting for that?
I can't say as yet. Yes.
Looking back at the prospectus in preparation for this interview, one thing that struck me was your revenue projections, your 5-year projections. And I saw there for 2019 where you were projecting $147 million in revenues for 2019. Up to September, January to September 2019, you're about 40. So that's about a third of the way there.
Yes.
So,
and that's one more thing. I'm glad you asked that, because that's one more thing that's important to track in terms of the timelines. So obviously you would have done the projections and the prospectus and so forth before you start the year.
But that's a big difference.
It's a big difference, but Icreate finished its build out at the end of Q2, right? So between Q1 and Q2, it was the same infrastructure before we listed. So when you look at the growth that Icreate has been experiencing, it's more in the Q3. Obviously, we can't talk about Q4 because that's not out.
Right.
But any kind of not realizing the revenue potential was all an issue of timing. So, you know, the timing in terms of when you get the funds and when you completed the expansion to enroll the number of students that you need to enroll to realize that type of revenue impact. And then, of course, I think in the prospectus, our bottom line target was about 7.5 million. That would have been impacted also as a result. So the costs are the first thing to go up, but the infrastructure, the kind of facilities weren't in place as yet to realize the revenue growth.
So obviously, even when Q4 numbers come in, you're not going to hit that 147.
No, we're not going to hit that. So our focus now is to, you know, move forward we have a fresh year ahead of us, 2020, and the entire team is aligned as to our objectives for the business.
And that's going to impact the rest of your projections as well for the 5-year plan that you had put forward.
It's not significant when you look at it. I think the most important thing to look at is the bottom line, right? What type of profit we're making or projecting to make. The first year of listing was almost break even. I mean, obviously, it's going to finish in the red. Yeah, I mean, Q3 was in the red, 9 months. But when you look at the overall profit impact, I don't think it's going to throw off the type of, projections. I mean, I feel very confident about the team's ability to continue to drive these numbers. We have a very good chairman, Lisa Mitchell, that is, work very closely together as it relates to the growth of Icreate, and we have the support, so it's just to continue to focus.
Mm-hmm. So you still see 400 million by year 5?
400 million in revenues?
Revenues, yeah.
I mean, I can't talk about that. That's what we have in the prospectus. But the most important thing, as I say, we're committed to meeting those bottom line targets.
But I think you made an important point in the beginning, though, talking about Icreate being a startup company, because you guys only formally incorporated in 2018.
Right.
So this is what, year 2, heading into year 3 now,
right.
Ending up year 2. Mm-hmm. And that happens with startups, with businesses that are new. Yeah,
a kind of stock like Icreate is a more long-term position if I was an investor, you understand? So it's important for investors to understand the journey and the type of business and how you make money, how you become profitable, the people behind it, the type of innovation that's necessary to propel the company forward, the longevity for the business in terms of the industry, how scalable it is in terms of moving into other locations, into other markets, how easy is it to introduce new products. These are, with a startup, I think I have a fair understanding of startup going through it myself with this and a couple of other ventures and so forth.
First few years are difficult.
First few years are difficult, but the most important thing you try to ensure is that you are growing your top line. That's very important.
What's the biggest thing that you've learned throughout this process over the past 2 years at Icreate?
Patience. I'm an entrepreneur. I'm a risk taker. I move quick, make decisions quick. But now being publicly listed and the type of governance structures that's in place and the committees and so forth, I think it has taught me a lot about patience and just kind of being more inclusive and collaborative from, the board, right down. For me, I've learned so much as a chief executive officer. I think all these years I was more the entrepreneurial, making these moves, making these deals, blah, blah, blah. But, kind of more corporate, I would say. I've learned a lot where that is concerned, processes and so forth. And it's fun. I've had good exposure before.
Was it more difficult than you anticipated?
In terms of running a kind of...
Yeah, accountable to, at the IPO, 819 people.
Yes. Well, listen, the thing is, from I started as an entrepreneur, I've started like a pseudo listed company, right? I've had boards from I was 22 years old. I've had Richard Biles as chairman before in eMedia. So I'm kind of exposed already to some of the type of structures that are necessary. But the stock exchange one is one that you can never be prepared for enough, because there are a lot of variables in terms of even the culture around your board, the expectations of 800 odd shareholders that you have no control over. So definitely I've learned a lot about that and those, kind of different buckets of groups, individuals. But it's something that I've been preparing for. Wanting to list has always been a number one objective from the minute I started my company.
What are the plans for 2020?
Just focus on growth. We have some partnerships that we're working on. As I mentioned, the Community Colleges Council, Trend Media, we're having a very good rapport with the Trend Media team. Trinidad started up quickly.
You expect this will be the year that the numbers turn around and you're in the black?
I mean, I can't say much about that, but yes, we're focused on growth and we're focused on being profitable. That is our number one objective, to ensure that we deliver for our shareholders and we'll continue to be that cutting-edge, innovative, forward-thinking company. And the reason why I say that is, you know, when you look at the creative economy globally, it makes up 5% of GDP. And I say this all the time, so I'm almost repetitive. In the UK, you know, it's one of the fastest growing sectors in the overall economy.
I noticed that you have on your orange shirt, so not PMP.
No, it's more salmon.
Economy.
It's salmon.
The creative economy, the orange economy.
Yes, the creative economy, orange economy. It is, you know, when you look at what is happening globally, that's pushing the need for skill sets within the creative economy. Disney bought Fox. You know, there's Apple TV Plus.
It's definitely a growing industry. Look at what we're doing here.
Right, even what you're doing now.
Look at what we're doing here. This is brand new.
The type of skill sets that we're going to...
the same type of service that you offer and that you're training people to do.
Yeah, man.
I had an opportunity to speak with some of your students recently.
Oh, yes.
Look over their shoulder and see what they're doing. And they're producing good work.
Yeah, man. It's always a joy to see when individuals come in, have an interest, and leave with the experience that we promise to give them. And you know, Icreate graduates, I can tell you they can work on major video projects, photo projects. I've seen them on sets, I've seen them outside of our studios working with major companies. And it's just to show how important this is, because this is with the growth of you know, the fourth industrial revolution and us 5G technology, you know, even what you're doing now with taking stocks, you know, the type of quality HD move that was 5-6 years ago, you know, 4K, 5K. It's going to be massive.
Digital media space.
It's going to be massive.
Yeah, I see the vision. I know it's hard. It's hard.
Not easy.
Running a business is not easy, but I see where you're going, and I wish you all the best, Tyrone.
Appreciate it. Thank you.
Right, good. When we come back, we'll have your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Time now for your market recap. 92 stocks traded across both the main and junior markets of the JSE for the week ending Friday, January 10, 2020. 38 advanced, 47 declined, and 7 traded firm. Nearly 133 million shares changed hands on the Jamaican dollar market, totaling $557 million. Wigton Wind Farm traded the most, taking up nearly 31% of market volume. The stock lost 1 cent, with people buying and selling nearly 41 million shares in the company. Wigton closed the week at 97 cents. Sagicor Select Fund Financial traded the second highest volumes, but the price remained unchanged, closing at $1.12. People bought and sold nearly 30 million shares in the company. And Fontana lost 3 cents, with people buying and selling 11 million shares in the company. The stock closed the week at $7. Turning to the top advancers now, EPPLEY 7.5% preference shares due 2024 saw the biggest gain. Its share price jumped 33% to close the week at $6.10. Portland JSX gained an impressive 25% to close the week at $9, and G West rose 18% to close at $1.25. On the losing side now, Main Event Entertainment Group took the biggest price hit last week, losing 19% of its value to close at $5.20. Salada Foods Jamaica was the second biggest loser, down 18% to close at $30, and Derimon 2021 preference shares also lost ground last week, down 17% to close at $1.80. This segment of Taking Stock, The Analysts, is brought to you by Proven Wealth. Jamaica Money Market Brokers, and Ideal Portfolio Services. Welcome back to Taking Stock. We're joined by a team of analysts to examine the week in business. I have with me this week investment research and sovereign risk analyst at JMMB Group, Leavani Dillon, research and strategy analyst at Sagicor Investments, Jodianne Aris, and senior wealth advisor at Ideal Portfolio Services, Oric Angus. Welcome. Happy New Year!
Happy New Year!
Your first time on the new set?
Yes.
So you have space now, you can sprawl out, just squinch up on the couch anymore.
It's nice, I like it.
Yeah, well, let's start with the market this week. Anything stood out for you?
What was interesting to me, JAMAICA'S, the board is meeting to consider, among other things, another stock split. This is also interesting because they did one April 2017. So this is a second potential stock split within a relatively short space of time. The last time they did it, it did have a very positive reaction on the stock. So far, there's a little movement in the stock. Sometimes these things can take a while to play out. But to note though, just to caveat it, a company doing a stock split doesn't change the fundamentals of the company. So it's just more something to make the stock more liquid and probably a little bit more attractive and cheaper on a nominal basis to investors and make it more attractive from that perspective, but it doesn't change the fundamentals of the company.
I saw that article with John Jackson in the Financial Gleaner on Friday saying that for some reason their stock JAMAICA'S just seems to stall at like $6, $7 and people don't want to pay more for it than that. Why do you think that is?
I'm not sure why that would be, because investors should pay attention to more valuation and fundamentals, not necessarily the nominal price. When I say nominal price, I mean whether a stock is trading at $1 or $200. It shouldn't change. What should be front of mind is that price to book, price to earnings, growth potential, quality of management. So I'm not sure where it is. It's more of a behavioral bias, more of a how investors feel about a stock, because they tend to sometimes pay too much attention to the nominal price. So I guess that may be the reason why they might think it's time to do another stock split to get investors to focus on the fundamentals.
Jodianne, what caught your attention this past week?
Well, for this week, looking at a busy December, we're coming into a very lukewarm so far January. I think thus far we only have First Rock that's coming out with any offers, IPO type. And so I think they have been doing quite a bit of their investor briefings this week. So we have been having a lot of conversations surrounding First Rock and whether or not that is a good buy, yes or no.
I'm going to ask you for what your thoughts on First Rock are soon. But let's move on to Oric first. What stood out for you?
Yeah, my thoughts are similar to Jody's. I think the market is soft in the sense that investors are kind of playing a wait and see. Many are in anticipation of the upcoming IPO First Rock, and then there are a lot of buzz around Jamaica IPO that should surface anytime soon. So it's kind of a hold on to liquidity and wait and see. But otherwise, from what I've seen on the market this week, GK and Sagicor have made their move. The stocks are trading up about 5 to 7% since the start of the week. I think Sagicor is in the 73 thereabout, and GK is around the same.
Interesting you should mention those two, because I got an invitation in the week for GK's new venture into insurance.
Yeah.
Canopy,
Canopy.
Oh, yes.
That's a joint venture with them and some Muslim entity. I'm not sure.
That should be interesting.
Yeah.
So that's going to shake things up in the insurance.
Life insurance.
So I wanted to zoom in this week on real estate, since you guys had mentioned that start of January has been kind of lukewarm, kind of tepid as people await some of the IPOs coming up. So I wanted to take a look at what's going on in the real estate industry, because a lot of conversation has been going on there. We see the developments going up. It's the First Rock coming out. They're a real estate investment company. So looking at the companies in real estate now, Pulse going into residential, First Rock IPO, Stanley Motta. What are your thoughts on the industry right now, Leavani?
It's a bit mixed. Go through it company by company. So if you look at 138 Student Living, that company is trading at a price to book at about 0.3 times book, one of the cheaper stocks on the market, and using that metric. It has had some issues over the years, which is the reason why you can look on it right now as more of a depressed stock. in terms of the valuation. Then you look on companies like KPRE, which year to date I believe is up about 18%. So, and the year's just started and it's off to a good start. They recently raised some money in their rights issue and acquired some property recently also. That one seems to be doing fairly well now. And then you have Sagicor Select Fund, X Fund, and that one is showing about 0.8 times book. That one has had some issues recently in the past. They seem to be working through that now, and the stock is up a bit. I don't think it's up much this year, but you can see it's recovering in terms of the performance. So I think it's a mixed bag in terms of company by company. Some doing well, some not doing so well. Overall, though, it seems like the index is, as in like the peer group, the real estate peer group, seems to be doing fairly well over the years overall. And then when you look on the market itself, the real estate market, particularly in Jamaica, you see that's very buoyant. There's a lot of activity there. I mean, the recent tax changes, I think, did some help that out a bit. So I think overall, the real estate industry in Jamaica is poised to do fairly well. And I think that's part of the reason why there's a lot of buzz around First Rock, is because for 45%, at least initially, about 45% of the portfolio will be focused on Jamaica.
Right.
So if you have that bullish outlook, I mean, some investors will probably try and get some exposure through that. So I think overall, it's good. There's a steady move higher in the industry.
Tech X Fund out of it, Jody Ann, which one has your attention right now?
I think the market in general, when you consider what we look for in real estate, I mean, you want exposure to that asset class because there's consistent inflow revenue when you consider rental income, as well as they're going to pay out, so you have that dividend income that should come. There is not one particular for me that stands out. I think I'm more with Leo. When you look at the valuation for real estate companies, you want to at first start out with what it is trading at, so what's the book value per share. So you want to be saying that I'm buying the assets in this company at close to book value as possible. And we see where most of these companies are trading at a very fair price when you compare your book value to the price that it's trading at. So particularly the sector for itself, I find to be, I'm very bullish on the sector. There's not any one particular in the group that I would definitely say I'd pick that one, but it depends on your feeling and your liking for a particular company and the vision and the plans that they have.
Or do you have any concerns that there's too much going on in real estate right now? Some people saying this is a bubble.
People saying that the market is too ripe right now. I think now is a good time to jump on these opportunities. If you look on the...
Well, ideally 5 years ago would have been a good time when it was cheap, now it's expensive.
But still, the opportunities are still there, because if you look at 138 SL, I still think that stock is trading below its fair value. It's very cheap in comparison to all the other REITs on the market. But when you look at the performance of all of those REITs on the market, it performs similar to any real estate asset. It's long-term gradual growth over time, and you're going to find that with REITs, because the main characteristics of these funds is that they're income and growth funds. So 50% or a bulk of the profits is paid out in dividends. So the growth from the stock is not going to be similar to like the other equities on the market. Mm-hmm. You get me? So generally, right across the board, there is none that stood out to me right now. Maybe if I had to choose, it would have been 138 SL. That's my.
The point you raised is one that I think that's important for investors, because they look at an EPPLEY Caribbean Property Fund, and you see it's not, the stock price isn't performing as well as some people might have wanted it to, and they start panic selling.
Right, you're not going to get that from the REIT.
Right, so you need to think about real estate company, investing in a real estate company like investing in a house. Mm-hmm. The price is not going to go up tomorrow. Mm-hmm. Yeah. It's going to take a little bit of time.
Yeah. Right.
Well, let's come specifically to First Rock now, because we've been kind of talking around it. First Rock opens today, Monday. So, Leovani, what are your thoughts on First Rock?
So, First Rock, as you just recently said, it's exposed to the real estate space. Now, the space on a whole is doing fairly well, so that's a very big positive for them. Also, First Rock has a plan to distribute a minimum of 50% of their income in profit. So that's also a plus. So they have credible plans. They have a plan in the works to distribute capital to investors, as in like dividends, which is what you want from a REIT. That being said, there are some issues. One of the issues that I would take with it is the price to book, roughly where it's coming out. When you adjust for the new money coming in and the current value of it, it comes in at about 1.1 times, book a little bit above book, right? Now, while that's not far-fetched, for example, KP right now is trading at 1.3 times book thereabouts, so it's not impossible or extraordinary for a REIT to trade above book. However, the thing is that the company, First Rock, is relatively new. So the thing is, you'd want to see that track record, because it really began operations in March 2019, as in it really...
So that makes it a riskier investment?
Yeah, so it makes it a little bit riskier. So ideally, you would want to see a little bit more discount on it instead of a premium to book. That being said, the plans that they have are pretty good. So the thing is, I would say it's risky. Our outlook on it here at JMB is that you can take a waiting towards it, but you'd have to make sure that you're really constrained, as in like you don't want to be overly exposed to it if you decide to take that exposure. Again, it's just like any other investment. We consider it more like a portfolio approach. So of course you don't put too much of the eggs in any one basket. So it's something to consider from that perspective. You could consider it. Again, you do have a lot of other real estate companies that you can choose from. Some of them trading below book marginally, some of them trading above. But I think one of the things that's going to create a little issue in terms of, at least right now, is that the track record isn't really there. Once they build that up, because if they can execute on what they have in their prospectus as plans, if they can execute on that, it's actually a very good start. But the thing is, sometimes meeting these plans is not as easy as it might look on the face of it. So
people want to see that they can deliver. Because they're going into developments themselves, not just holding.
Not just holding.
Actually
develop themselves. So and then that with it carries risk in terms of the time might be longer than you think it will. So there's issues with it from that perspective. But that being said, again, if you want real estate, but there's some risk there. So just be mindful. Don't expect a quick return on it if you go in. You have to consider if you're in it for the long haul and one of your primary concerns is income, then that can assist you.
Jody, and I think all of the analyses that I've seen coming out from the investment firms have First Rock as under, what's the term that you guys use?
Undervalued?
Something like that, yeah. There is risk involved in this particular IPO. What are your thoughts on it?
Let me just first put a disclaimer that statutory investments are ranges for First Rock IPO. I'll just state the facts, positive and negatives. I think based on when you do calculation and you look at it in terms of the price that it's offered at, it is a bit premium compared to book price. And so we'd consider that to be fairly priced, right? So we're not going it's where you'd ideally want to go in at book or below, but it's not to say that you can't go in above book, just general. In terms of positives, it's the outlook for Jamaica and the residential and commercial space is positive. We're expecting to see more growth in the market. So and that's a plus for them. On the other hand, there is just general risk that is associated with real estate investments. There are general delays that come with construction, and so things may not happen as fast as they have outlined in the pipeline, which is just generic to the sector, not specific to the company on a whole, as well as the ability to raise capital in the future, which is something that comes when you have real estate companies, in that the initial outlay, capital outlay is heavy. And as such, when you get a debt or you take equity at the start and you deploy that and then you pay out dividends, to go again and to continue the business of the company requires that you have to go back and get equity or to raise debt, some amount of capital. And so it will be crucial for First Rock to display their skills, how well it is that they can manage and how well it is that they can do these developments and pay out and meet dividends. In this beginning phase will be crucial to see how well they can raise equity in the future.
And meet their timelines. Right. Yeah. Underweight is the term I was looking for. What does that mean, Ori?
Well, what I'll say is, and I'm happy that you touched on that point because I read the analysis today, and I totally agree with your guys' sentiments in regards to the premium price of the stock. It's a risk, but in my opinion, First Rock is a little different because that risk is compensated with the level of diversity that it comes with. In terms of, I think it's one of the very few, if not the only one, that has that much exposure across the different geographical locations, if you really look at it. So I think that's a plus for them, and you guys as well can use that as a selling point for the IPO. In terms of underweight, it's similar to being undervalued. It's not the best deal out there now in terms of the fair value, but obviously you'll be paying a premium for it, but I think it's worth looking into for someone who wants real estate exposure, whether you're conservative, moderate, or aggressive investor.
Well, thanks for talking to me. All the best. Look forward to more analyses in 2020. We take a break here on Taking Stock. Taking Stock, the Analysts, was brought to you by Proven Wealth, Jamaica Money Market Brokers, and Ideal Portfolio Services. That's our show for this week. Thanks for watching. Make sure you subscribe to this channel, youtube.com/KalilaRay. Follow me on Instagram @KalilaRay, and tell a friend about my other features as well. Money Mondays JA, Money Moves JA, and What's in It for Me. On Money Mondays JA this week, IPO Pro is shaking up the game. Proven Wealth, they'll tell you all about it. I'm Kalila Reynolds. Until next time.